Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, March 13th, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to see the S&P 500 E-mini futures are trading lower by just half a point at the moment to around 15.52 per contract. They're jumping around here between positive and negative. The futures were lower just a little while ago, but it looks like retail sales were just released. Retail sales coming in, I guess, a little bit better than expected, and the markets are catching a decent little pop off of that news. But also on that news, take a look at the U.S. dollar index. U.S. dollar index is also catching a bid, and generally in the past, the stronger dollar did not coincide with a stronger stock market. Recently, with the light volume action that we've seen really throughout the last couple of months, the dollar and the market have traded up together, and that's a little bit of a decoupling from what I'm normally accustomed to seeing. So we'll see if that can continue. I ultimately think a strong dollar is going to be a negative for the stock market, but right now it does not seem to be the case. So in any case, we watch the charts, and that's what's important. But the dollar is catching a big bid, and now futures are positive by 3/4 of 1 point. So they're up 75 cents here to 15.53. So we'll see where this market trades out today, but positive economic data coming out of retail sales. Looks like there was a revision as well. I never really read too much into these numbers. I just look at the market's reaction, as I feel that's what's most important. So again, markets are trading higher, but so is the U.S. dollar index, and we'll see if that U.S. dollar, a stronger dollar, should tell us that interest rates need to be going higher as well. Higher interest rates ultimately will be a negative. Right now, I guess they're not being interpreted that way, but if they start to stall out mortgage loans and things like that, it could be a negative. Borrowing costs will go up, and the Federal Reserve may need to cut out their quantitative easing ultimately, although we don't see that happening right away, but that the market could force their hand. But in any case, it is what it is. We'll see how this market plays out going forward. Couple of other things to go over. Looking at the European markets this morning, you do have Italy down about 1.75%. It looks like there's big problems brewing in Italy. I think there was some news earlier. One of the politicians now, ex-comedian Beppe Grillo, is saying that Italy is already, basically leaving the euro. So we'll see if that is the case. Sounds like the only person over there with any common sense, to be honest. But either way you slice it or dice it, the Italian market is down sharply today, down 1.75%. Spain is down 1%. Germany is down 0.2%, and France is down about 0.5%. The London FTSE 100, now they can print their own money. England can print their own money, the Bank of England. But they are down about 1% as well. So problems are brewing in Europe, despite the strong economic data here in the United States. But that will become problematic. Also, last night in the Asian markets, you did have the Shanghai finish down 1% again. India, the Bombay Sensex index closed down 1%. That is not a bullish sign. And the Hang Seng, which is Hong Kong, usually does better than Shanghai. That was down 1.46%, so say close to 0.5%. And the Nikkei 225 was down 0.6%. So we had some definite weakness. Looks like Singapore was probably one of the stronger indexes last night, finishing lower by just 0.4%. But either way, you do have a weaker Asian market, especially in the Shanghai and the Indian market. So traders should watch the Indian ADRs, Chinese ADRs. If the U.S. markets are weak today, we could see weakness in the Chinese and Indian ADRs across the board. Now let's take a look at oil and gold today. We'll start off with oil today. Oil light sweet crude is trading up by 45 cents to $92.98 a barrel. That's a little bit of a disconnect considering the strength in the dollar. Take a look at that U.S. dollar index. It's soaring here, but the USO is holding up, or I should say light sweet crude is holding up pretty well. So here's the USO catching a pretty good bid. Very strange action, but it is what it is. You will have oil inventory numbers out at 10:30, so watch for that. There could be a little change in sentiment after those oil inventory numbers are released. but they will be released at 10:30 this morning. Right now, light sweet crude is higher, the USO is higher, and we'll just see how this plays out. I don't have any specific levels on this one at all. Gold is also flat on the day. It's actually trading up about $2 to 15.94 an ounce. Take a look at the GLD, which is a good proxy for gold. That's trading around 154 today. Yesterday this closed around 154.19, so don't want to make too much out of it, at least not yet. Yesterday gold held up pretty well, had a nice little pop and held its gains, so we'll give gold the benefit of the doubt at the moment. But the stronger dollar is definitely not a sign of strength or a bullish indicator for gold and oil going forward. We're looking at a couple of gap plays this morning, but nothing all that critical. So we should have those released in the chat room probably around 9 o'clock this morning. So pretty much that's it. I think we do have some more economic news out around 10 o'clock. We'll see how that plays out. But really, that's about it going forward. So we'll leave it here today. I want to wish you all a great trading day, and we'll see you on the charts tomorrow. Take care, everybody.